call from the management team we have with us, Mr. Rupesh Kumar Gupta, Managing Director, Mr. Sailesh Gupta, Whole-Time Director, Mr. Amitabh Bhattacharya, Chief Financial Officer, and Ms. Rekha Singh, Company Secretary. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to detail us about the business and performance highlights for the period ended 31st March 2025, the growth plans and vision for the coming year, post which we will open the floor for Q&A. Over to the management team.
Very good afternoon, everyone. This is Rupesh Kumar Gupta, Managing Director of Hariom Pipe Industries Ltd. Thank you all for joining us today on this earnings call to discuss the financial and operational performance of Hariom Pipe Industries Ltd. for the quarter and financial year ended March 31, 2025. Despite a challenging external environment marked by weaker steel demand and pricing volatility, I am pleased to share that Hariom Pipe has continued to demonstrate growth led by our integrated manufacturing model, strategic investments, and a growing footprint across key markets. In FY25, we achieved our highest ever annual sales volume of 2.45 lakh metric tons, reflecting a 23% year-on-year growth. This was possible due to higher output of MS tubes and galvanized products. Following better utilization at Mahbubnagar and Perundura units, revenue from operations grew by 18%, even as average selling prices declined by 5%. This showcases the strength of our volume-led growth strategy, backed by a reliable dealer network and efficient supply chain execution. What is particularly encouraging is the increasing share of value-added products in our portfolio. These contributed 97% of our total revenue, up from 92% last year, reaffirming our continued focus on customer-centric, margin-centric segments. On the profitability front, EBITDA increased by 27% to 175.4 crore, and our EBITDA margin expanded to 12.93%, driven by operating leverage and tighter cost controls. EBITDA per ton stood at 7,147 compared to 6,964 in FY24. Profit after tax also rose by 9% to 61.7 crore, despite an increase in depreciation and finance costs due to capacity expansions and commissioning of new assets. Another key highlight this year has been the significant improvement in cash generations. Operating cash flow increased 15 times to 78.6 crore, translating to a 45% EBITDA to cash conversion ratio. This reinforces the quality of our earnings and the efficiency of our working capital management. Our balance sheet remains healthy. Net worth increased to 573 crore, and our net debt to EBITDA improved to 1.99 from 2.45 last year. Return on capital employed stands at a strong 19.2%, and return on equity remains healthy at 10.8%, even after expanding the equity base. Looking ahead, we remain focused on building a sustainable and scalable business. We have incorporated our wholly owned subsidiary, Hariom Power and Energy Private Limited, to execute a 60 megawatt solar power plant project under a 25-year power purchase agreement with MSEDCL. The project is expected to generate approximately 9.6 million kilowatt annually and will be completed over the next 18 months. This initiative is a strategic move aligned with India's renewable energy goal and government incentives. It will strengthen our ESG profile, help reduce our carbon footprint, and enhance compliance and brand positioning. Additionally, it supports our vision to establish a green manufacturing facility in Maharashtra and open up a new revenue stream through the sale of solar steel structure and profiles, both for this project and for the broader renewable infrastructure market. Our expansion journey continues with targeted investments in capacity growth, especially in value-added products. We are also actively enhancing our reach in Western and Northern India while exploring franchisee and rural market models to penetrate deeper. To sum up, FY25 was a year of scaling new milestones, both in terms of volume and value. We believe that the foundation led this year has prepared us well to deliver 30% volume CAGR over the next 2 years, supported by internal accruals, sweating up of assets, and a strong channel ecosystem. On behalf of the entire board and leadership team, I thank our investors, customers, employees, and partners for your continued trust and support. Thank you.
Thank you, sir. We'll open the floor for Q&A now.
Yeah.
All those who wish to ask a question may use the option of raise hand. In case you're unable to raise hand, just drop a message on chat and we'll invite you to ask the questions. We'll take the first question from Keshav Garg. Keshav, you can go ahead, please.
Sir, I'm trying to understand that if we compare our FY25 numbers to FY22, then the power to sales has come down from 13% of revenue to 5%. Sir, value-added products have increased from 66% to 96%. Volumes have increased around 4 times. Our debtor days have doubled from 23 days to 54 days. Sir, but still our EBITDA per ton has declined from 8,500 to 7,100. So it doesn't make sense to me that we are giving double the credit and our value-added product proportion has increased from 2/3 to almost 100%. Power to sales in itself, there is a 8 percentage points delta that should have percolated down to the EBITDA margin, which remains flat. And sir, EBITDA per ton is actually down despite the operating leverage. So I'm not able to understand that why exactly our EBITDA per ton has declined.
So thank you, Keshav, to raising all the concerns of yours. That's really good to understand all your points. It's a big question that you have placed us, but still I would like to invite you to our plant to visit and check what exactly are the performances doing and to understand the complete process and other things. It's better we meet one-to-one and understand the business in a better position. As raised by you, 8,500 to 6,000, 7,100 has been dropped down as EBITDA. The marginal growth in all the parameters are good enough to move in terms of all the aspects as we are growing in the state-wise, as well as the product basket is also getting grown up. Apart from that, the volatility of the market plus the market scenario is getting changed year on year. So in that position, EBITDA margins are being maintained well in the control, and as the expansion plans are going on, the things are there well in place.
So, and what is the outlook in terms of EBITDA per ton as well as operating margins for FY26?
So the EBITDA per ton remains almost similar. This may vary with 200 to 500 rupees, 200 to 500 rupees. Plus side only, because as we are entering into the new aspects of power and other things, which will also add on some cost effectiveness and the values in the process.
Sir, please tell us that what percentage of our total output in terms of sales volume is coming from basically the sponge iron. I mean, or let's put it this way, that what is our backward integration percentage? What percentage of our raw material are we captively producing from sponge iron?
Just hold a second. We'll be specific on it.
So basically, we have to understand that when you are comparing with FY22 versus FY25, you have to understand that in FY22, we are totally integrated facility. We are dealing with MS tubes. Our value-added product is only MS tubes and scaffolding, which is produced from the integrated source, from iron ore to end product, where the EBITDA margin is consistently high. Second thing is, in FY22, the part ton realization is much more higher than the FY25 part ton realization. Third thing is, when we are talking about FY25 EBITDA margin, that is including the galvanized and cold roll product, where the major raw material is HRC, hot rolled coil, that we are consumed from the domestic market as well as international market. So whatever our for production of MS tubes, we are generating this HRC from our own integrated facility. So up to HRC, whatever the margin that was intact with Hariom for selling of MS tubes. But when we are talking about galvanized product, that HRC margin is with the supplier. And from HRC to end product of galvanized coil, that much of margin we can generate. So part ton EBITDA, if you are product wise, if you are divided, so part ton EBITDA is different for MS tubes earning by Hariom and part ton EBITDA earning in GP and CR. That is why average EBITDA per ton is coming a little bit lower than FY22. I hope I can able to explain you properly.
Yes, sir. I understood somewhat. And so last question from my side before I again join the queue. Sir, now we have a very aggressive target of growing by 30% volume growth for next 2 years. Sir, if we see post-COVID, the whole industry has done well. The whole industry has delivered and everybody is aggressively expanding capacity. So I hope, sir, there is no glut in the market because all the supplies are coming at the same time and everybody is expecting aggressive volume growth, and surely the market is not growing by 20-30% in terms of volume. So then basically will we be able to sustain our margins as well as EBITDA per ton?
Sir, first of all, we have set a 30% volume growth target for the current financial year. And so far in Q1, in progressing well, last 38 days, we are sitting on 10th of May. Last 38 days, we are track achieved around 14% volume growth in Q1 comparatively to the last year. And this is in line with our internal plan. The balance growth will pick up in the coming quarters as new market geographies, franchisee channel and capacity utilization ramp up. So I am make sure that we'll be definitely reach whatever we have targeted for this financial year as far as volume growth realization. Moreover, I am happy to announce that the price realization is also comparatively to the Q4 versus Q1 is almost all up 7%.
Sir, I got your point. Sir, I'm sure you will achieve your volume growth. But what I'm trying to understand, if there is a glut in the market, then maybe your operating margins and the EBITDA per ton might suffer. That is the question.
नहीं होगा. रीजन क्या है कि बेसिकली जो हमारा बैकवर्ड इंटीग्रेशन है और जो प्राइस को जो हमारा अजम्पशन होता है जो कि नेक्स्ट मंथ में होने वाला है, उस चीज का हमारा बहुत अच्छा कंट्रोल है. जहां पर उस चीज का कंट्रोल है वहां पर नेक्स्ट मंथ को हम प्रेडिक्ट कर सकते हैं कि क्या होने वाला है. उस बेसिस पे हमारे परचेज एंड सेल्स डिफाइन हो जाते हैं कि व्हाट टू डू एंड व्हाट नॉट टू डू. So we are not worried on the market size expansion and other things. Everyone has its own goal and areas to cover. मेरा जो total model है हरिओम का, वो basically is totally different than others. We are on a dealership based model wherein every end consumer it has to get the range of the products what we are supplying in the market.
Okay, sir. Thank you.
Margin to product, it depends on market to market scenario.
Thank you, sir.
Yeah.
Thank you, Keshav. We'll take the next question from Udit Sehgal. Please go ahead.
Sir, are we seeing any impact on steel prices because of the anti-dumping duty? And should that theoretically increase our margins?
Yes, thank you, Udit. Basically, yes, it is again a favorable point by Government of India. We thank it from the industry segment. Because of this impact, undoubtedly the primary producer prices have gone up, which is a positive sign for Hariom.
And how much of our product is, sir, fully backward integrated? I think the previous participant also asked the same question. 1 second.
Sir, our total raw material produced by 232 metric tons and fully backward integrated output is almost on 137,000 tons.
Okay. So basically on this 40%.
That is totally MS tubes. Whatever we are producing MS tubes, that is totally backed by our integrated process. Whatever we are selling that galvanized and cold rolled product, that is totally backed by HRC coil purchased from the market.
And on our current capacity, what is our peak revenue, and how much are we doing? What is the capacity utilization going on right now?
The peak revenue will be if we are utilize the capacity. The peak revenue is on the present market sales realization value. If we take into the consideration of the Q4 FY25 value, then that will be reached in terms of value up to 2,250 to 2,300. Okay. And if it will increase by another 7 to 10%, which we have received in the Q1 FY26, then it will be reached near to 2,500 crores of the present existing capacity.
And you have guided for 30% volume growth, sir. But what is your guidance on the PAT growth also, because our interest and depreciation has also gone up. So what can we look at that?
So PAT growth in terms of volume, in terms of absolute value, you can see that last year-on-year basis, we have grown around 9% on absolute value figure, and we are consistently grow in such way. But the percentage, if you are taken into the same percentage level, absolute percentage level versus turnover, then it will remain near to 4.5 to up to 5.5 in between, depend on the other parameters.
Okay, sir. Thank you. That's it from me.
Thank you, Udit. We'll take the next question from Adesh Gosalia. Please go ahead.
Thank you for the opportunity. I hope I am audible.
Yes, yes.
Yes.
Yeah, so I had a couple of questions. The first one being, sir, our gross margin has contracted in the year. If we see the FY25 performance, our gross margin has come down to 22.8. So what is the reason for that? And even on a quarterly basis, mainly on a quarterly basis also, in Q4, our margin has contracted to 21.3. So what is the reason for our gross margin contraction?
So that gross margin is actually material margin. So due to that imported coil was stopped by the government due to that safeguard duty. The domestic HRC price is going up, and during throughout the year also, if you check that, the volatility in the steel price was happened. So due to that, the material margin or gross margin is little bit coming down. But as far as our internal control and very much cost-effective operational skill, we have managed our EBITDA in the similar manner and more than the last year.
Okay. And so the capex plans and what capex plan for the coming years, and what will be a maintenance capex?
The total capex was done around 100 crore plus, 105 crores. Out of that maintenance capex is coming around 10 to 12 crores. That is rolls and some of the mainly rolls and some of furniture, fixtures and all those things. Major capex is taken care in Perundura unit, where we have addition the new product vertical, which is called CTL, cut to length, which basically this product is used for automobile industries, where the making of the body of the trucks and all those things. So that plant, and as well as we have put renewable power systems, solar panels in Perundura unit of 1.4 megawatts. So basically this is the new capex.
Okay, and the capex going ahead will be in the same range also. Even the maintenance capex for our assumptions, it will be in the similar range of 10 to 12 crores.
Maintenance capex is rolls are general. It is a common thing for steel industry. That is happened always. And further capex at present we do not have any plan. But yes, as much as we are a growing industry, we definitely doing by our internal accrual in future as per the business needs.
Okay, and so as we have already gotten the board approval for QIP, so any update in that regards for fundraising?
At present, the board is differ from the QIP. We are not doing any sort of things. At present, we are in defer.
Okay,
So
so
it's on hold basically. Nothing is going on, nothing is working on, so it's on hold.
okay, so as of now it's on hold. Okay, okay, yeah, that's it from my side. Thank you so much.
Thank you, Adesh. We'll take the next question from Smith Gala. Please go ahead.
Yeah, Mike. Hello, sir. Am I audible?
Yeah.
Yes, you are.
My question was regarding power. So I wanted to understand what is the total power requirement for us to produce our products, and what of that is coming from renewable sources, because we have managed to reduce the power cost from 13% to 5%. And so what will be the power consumption in the future, and from how much will come from renewable sources?
Thank you for your question. I would like to share that first of all, we have to understand the process of the industry and nature of activity. See here, Hariom, as far as Hariom concerned, our power optimization unit is melting furnace and rolling mill. And the remaining of value-added product like pipe mill, MS tubes production, scaffolding production, or galvanized production, that is comparatively to the rolling mill and furnace, we require very nominal power, right? So basically, we require the power in, we have connected load in furnace is almost all 10 megawatts, and in rolling mill almost all 5 megawatts. So out of the total connected load, major contribution in rolling mill and pipe mill. Now your second question is how we are able to reduce the power. So basically what happened, as we are successfully concluded that hot charging facility implementation, therefore our rolling mill power cost for reheating the billets are not required. And it is due to that continuous process of this two crucible of induction furnace, our rolling mill always getting that 1100 degree billets through the conveyor, and it is processed. So therefore that reheating of billets are not required in rolling mill. That is the major power consumption for us. That's why you get that much of quantable difference. Second thing is, when you are using continuous 24/7 crucible, therefore your inside crucible temperature for melting of iron into liquid mode, that's required roughly 4,400 degree temperature. So that is automatically generated 24/7. Earlier, what happened? Earlier, we are not able to manage this thing of the continuous of hot charging facility. Therefore, our one crucible is always we are not using. Due to that, our power cost is going up. But now we are 24/7 operating system. Our power cost is coming down very good manner. And second thing is about that renewable power. We are presently having 3.4 megawatt of renewable power. That is totally used in pipe unit of entire Mahbubnagar plant pipe unit requirement, as well as Perundura unit. Recently, we have installed of 1.4 out of 3.4. That will be the impacted in the Q4 little bit, and the coming financial year, that is FY26, it will be impacted more.
Okay, thank you for the understanding, sir. The question to follow is regarding the new power subsidy that we are opening. So what will be the capex required in such company, and how much of those capex will come through internal accruals or through debt, or if equity? So how will go about to fund those requirements?
So I'll just give you a glance on basically the model, what exactly is going on. Like the PPA has been signed for 60 megawatt for Maharashtra government, and we are ensuring that this particular project will be completed by Hariom in first into entering into the Maharashtra government policies and all, understanding in the depth, and entering into a greenfield project in future. So this is the first milestone that we have entered into. पहले ये 60 मेगावाट को हम लगाएंगे, इसमें हम समझेंगे सब्सिडीज एंड ऑल जो भी हमको बेनिफिट्स मिलने वाले हैं, और रिलेशनशिप विद दैट महाराष्ट्र गवर्नमेंट आल्सो, एंड इसके साथ जो स्ट्रक्चर वगैरह लगेंगे, वो सारे स्ट्रक्चर्स वगैरह जितने भी बनेंगे वो पाइप से बनेंगे, एंड दैट विल बी सप्लाइड बाय Hariom Pipe Industries. Moreover, we are opening up the new wings for the new vertical, as the manufacturing of the structures of all solar players and supplying from Hariom Pipe Industries. तो ये दोनों एंगल से हम अपने बिजनेस के वर्टिकल को नए तरीके से खड़ा कर रहे हैं. That's the whole aim of the opening of this particular Hariom Power and Energy.
Okay, but on the capex requirement front, I could not get you clearly.
We'll give that.
So basically, in a layman language, for generating 1 megawatt solar power, you have to require almost all 3 crores to 3.25 crores of capex. So including the land, so it's roughly 180 to 240. In between, it has been happened. Higher side 4 crores means 240. Lower side 3 crores is 180. Presently, our entire team and the consultation team are into the process of land acquisition. And once it is completed, then we have to prepare the technical viable report and the detailed CMA. And after that, we are can able to give you the exact figure. So my understanding, my request is you can send a mail to our investors relation department or to me also. We'll let you inform through mail. Second thing is, as far as Hariom equity investment, it is totally backed by under the PM-KUSUM scheme, where we are getting the entire equity amount as a subsidy during the construction period from the central government.
Okay, thank you for the response, sir. One more question was regarding Ultra Pipes. We had recently announced the acquisition, but later on we cancelled it, and now we are taking the same on lease for 99 years instead of 40 years. So what will be the use case of this, and what will be the benefits that Hariom will get through these lease agreement with Ultra Pipes, which is a related party?
See, basically, Ultra Pipes is having a better technology, totally backed by solar power, renewable power, and certain sizes which Hariom is selling to the market. That certain sizes and big pipes for use in infrastructure is manufactured by Ultra. Hariom acquisition done through the long-term lease. The reason behind that, to cost effective of the stamp duty as well as some legal issues with the stamp department, we have shifted instead of acquisition in on a long-term lease, where the company will get a much more financial benefit rather than it is going to upfront purchase in the long-term basis.
Okay. One last question from my side was regarding raw material capacity increase, as we are struggling to get gross margins, and as you explained earlier that because we have to purchase our HRC coils from outside, so we are not able to get the margin on those. Are we planning to increase our raw material capacity for sponge iron or HRC in that matter?
No, but that is not
now.
That is routed through blast furnace mode. So we are not going to construct or capitalize for any blast furnace operation.
It's a big investment. We are not prepared for that now. Let us sweat down our assets first, and then later on we'll see. I can make sure that basically every year on year something or the other will move on in Hariom. That's for sure.
So do you see gross margins improving in the coming FY26?
Yeah, surely.
Because the volatility is almost all completed.
So any guidance on how much the gross margins will come up?
Again, the earlier, whatever the existing margin we have, that will be, very much hopeful to get that.
Okay, thank you, sir. That's all from my side.
Thank you, Smith. We'll take the next question from Vijay Chauhan. Please go ahead.
Yeah, thank you for the opportunity. Can you just repeat the number or the growth that you have seen in the first 38 days for the Q1 in terms of volume? We achieved around 58,000 ton in the last quarter, like Q1 FY25. So what is the growth? And you mentioned some realization growth as well. So can you please repeat those numbers?
Sir, we have
Sir, we'll avoid giving.
No, but we mentioned something in the beginning of the call only. So what was that number? Like 38 days, there was some mention.
Can you please be specific on that? I mean, what 38?
There was some like when I joined the call, there was some announcement like either quarter one, like in first 38 days, till 10th May, we saw some volume growth or some demand improvement. So some number was related to that. So I was, and you mentioned also that the realization has gone up from, I think, some 5% or 6%. So I just wanted to like get that number because I couldn't hear at that time properly.
So as of today, we are on track to achieve around 14% volume growth in Q1 compared to the last year, sir.
Okay. So this growth will be like 58,000 what we sold last quarter one. So you are mentioning over that only 14% or in the like you are looking only for these 38 days, like to like basis, like
Just a second, sir.
Yes, sir. Sir, to be precise, till last 38 days, we have achieved almost
14%.
Almost 33,380 metric tons.
okay, 33,000 ton. Yeah, that's good. That's good.
33,380 metric tons in the last 38 days from 1st April to 8th May. To be precise.
Okay, 33,000, right?
3,380 metric tons, which is almost all 40% of our Q1 FY26 target.
Okay. Okay.
Now I'm clear.
Yeah. Pretty clear.
Thank you.
And and realization side.
Realization side, we have received the average realization price is almost 57,000 plus, which is comparatively to the 5 to 7% high from the.
That's very good to hear. Now, if these metrics are improving, so basically, if everything else remains constant, and if we start to see finally the operating leverage, so last quarter one, which I recollect, our realization was somewhere around 59,000 per ton, and our EBITDA was also north of 7,300 or 400. And so, if these things are like, let's say, what you are saying, the matrices are improving on the forward-looking basis. So typically the EBITDA per ton also should improve because now everything else if remains constant. So typically it will improve, let's say EBITDA per ton and also the profitability what you were suggesting. So is that assumption correct? Because then only we will see like material improvement in PBT or PAT going ahead. So is that assumption correct?
Yes.
Okay. And anything on the, let's say, the new power initiative that we have taken of 60 megawatt. So have we finalized some, let's say, like IRR number, or let's say we have got some kind of like guidance. Would you like to provide on revenue or PAT going ahead?
So, Mr.
What
Vijay,
you see in
the
terms
process,
of, or is it too early to comment on that?
Yeah. Mr. Vijay, basically, it needs some more time to give you those figures. The process is under the way and it's going on.
Okay. No issues.
Thank you.
Thank you for that. Okay.
Thank you, Vijay. Sir, we'll take a question from the chat. It's from Nitin Gandhi. It's asking, what is the revenue of Ultra Pipes and capacity?
Ultra Pipes capacity is roughly 84,000, the total installed capacity that can be produced operationally up to 36 to 45,000 metric ton, because we have lot of sizes now. So every time we have to change the rolls and all those things. So almost 50 to 60% it can be produced.
So the peak revenue potential?
Peak revenue potential is almost
that we can take it later. Either we can just send them a mail or whatever.
Depend on the market realization value. It can be changes, but we can take only the volume figure only. We can speak about volume figure only, because the realization is not in our hand. So therefore, the volume base we can say.
Okay. And any capex required for the
No.
ultra pipes?
No.
No, not required. Okay, sir. Thank you. We'll take the next question from Rishit Javeri. Please go ahead.
Hi, sir. Am I audible?
Yes, please.
So, sir, two questions from my side. First, on the standalone business. So, how much is it coming from Western region currently? Because I think from last 2 years we are planning that we'll expand in the Western region. We'll get out of the South. But I think the numbers are not coming in. Are we facing any significant competition here in the Western zone?
Sir, to be honest, we are not prepare our data sheet on zone basis. We can say the customer we are having in the Maharashtra and other western part. But we are not having that readily available. I have no specifically zone basis data. I have the whole year. If you need this, you can mail to us. We'll specific questions we can give the reply.
But on the front of business, basically, apart from this one, the business is growing on the Western side, and we don't feel as we are supplying our value-added products, which are CRCA and the engineering products in that areas. So that particular business is growing in that areas, and we are getting good revenue from that. And even the repeated orders are there for even the pipes and as well as the coils.
Okay, but I'm asking, are we facing any significant competition in the West with our products? Because we are not able to significantly ramp it up even through our distribution channel or through distributors or franchisee model, anything.
No, so basically, once this particular line which we have installed last year is now growing up, and the products of those particular lines like CRGP, and coils and other value-added products, those are getting because it's like OEM segments, and we need to have the permission approvals from the upper bodies and all. So all those things are getting into place, and the business is growing. So there is not like more of competition in that area. Even GP pipes and all, yes, it is growing in that area, and the consumption is good.
Okay, sir. I hope you scale it up this year. Second question on the power Hariom energy part. I think our total capex would be 180 to 240 crores as guided. How much would be debt out of this, and how much would be equity? If 100% debt, what would be the average rate of interest?
Sir, it is not 100% debt. It is always maximum 75%, 70 to 75% debt are coming. Maximum side for any industry or as per the banking norms. Okay. So, and the rate of interest is coming, whatever as per the present Hariom rating, we are enjoying in our last financial year, altogether 8.85. So, it is in between 8.5. Will be there.
So, sir, just an inquisitive question here that we'll be taking around 100 plus crore of debt on the pessimistic side with an interest rate of 8.5, 8.9. Why are we allocating capital to an industry which is new to us and not investing aggressively in the industry we are present since long? First. Second, renewable is not a unique industry as of now. Since last 4 to 5 years, it is becoming a very competitive industry. So taking debt, adding pain to our interest expense, depreciation expense, and harming the standalone business, do you think this is an efficient capital allocation?
One particular point, as I mentioned before, कि ये जो model है, it is not only for the solar generation and supply, it is a model for a new vertical, जिसमें कंपनी के पास से बहुत सारा जो पाइप सेगमेंट और जो हम स्कैफोल्डिंग डिवीजन जो हमारा चला रहे हैं, उसी तरीके से we are just enhancing this particular division with a wholesome, ready-to-use material for all the solar manufacturers, not only for this particular unit. We have started supplying to a few of the consumers who are just the EPC partners who are taking the material from us and utilizing at their resources. So just to enter into some particular business, we have to have that platform ready. And for the future growth of the industry, we need to jump up to the central or the northern part of India wherein the raw material and other things are available, either the market or the raw material. So we see now as a Maharashtra as an option for our future expansions in moving ahead.
Agreed on your part that we are entering into a new segment, sir. But clearly, first of all, it will take 18 to 24 months to at least start and to scale it up. Secondly, it is a clearly new segment for us. So instead of taking such a long route, we would have taken a better indirect route, obviously with a lesser margin, but to just enter the industry, we could have partnered up somewhere, because I think 100-120 crores of debt currently on Hariom's balance sheet is not efficient allocation, sir.
So
That
that will not be
the debt is not coming in direct way on the day one, first thing. Second thing, it's a Hariom future expansion need. It is a Hariom future expansion need. We have to new for Maharashtra, as our MD sir is already cleared in their opening speech also. We have to start a new relationship where Hariom has entered into this segment with the Maharashtra government, backed by the PM-KUSUM scheme or by the central government. And the second thing is, as this facility, once we have generated this power, it will allow for our next future Maharashtra expansion to generate similar kind of activity for our own manufacturing facility also. So it is a kind of strategic move for a long-term vision, not a short-term vision. When we are doing the business, we have to think in a long-term way, not every time economically in a short-term way. So that is the strategic move. More than that, we cannot disclose in this platform. If you need further detailed clarification about financial and profitability and future expansion, all those things, we'll share with you one-to-one.
Okay, sir.
Thank you, Rishit. May I request you to please rejoin the queue? Yeah, we'll take the next question from Shaurya Yadav. Please go ahead.
Yeah. Hi. So my first question is, what would be our working capital days going ahead? Like our payables have increased substantially, which is a positive sign. Like, what's the reason for the same?
Working capital days.
Yes, sir.
Yes, trade payable days have been increased this year, and mainly due to the change in the way our purchase cycle and payment schedule are structured. As the business has scaled, we have aligned our procurement and payment terms accordingly. Earlier, we are not getting any credit from JSW and other companies. Now we are enjoying this credit facility also from the relationship of the JSW. And there is no change in our approach to vendor relationship. It is simply timing alignment that reflects our current scale and structure of our operations.
So, like, how much working capital days we are targeting in FY26?
FY26, it will be almost all net working capital days if you are taken. So it is coming around 100 days we are expecting.
Okay, sir. Okay, sir. And sir, like, since we are guiding to increase our volume and increase our VAP contribution, like, how much PAT growth we can expect in fiscal year 26, like in terms of percentage?
In terms of value growth or in terms of PAT percentage?
So PAT growth, I'm asking.
PAT growth last year it was 9%. So similar line of activity, between 9 to 12. We are in terms of value, we are expecting.
Okay, sir. Okay, and sir, my last question is like, what type of strategy we are implementing to increase our B2B contribution? Like it's been mentioned in our investor presentation that we are looking to increase our B2B contribution from 15%. Like what is our strategy going ahead?
So basically, in this particular line of activity, we are now supplying to multiple OEMs and the MNC companies who are there with us because of our tandem mill production and the quality enhancement in that particular unit and the division. In that particular segment, we are targeting that B2B business, which is giving us a good opportunity to enhance our revenue as well as the EBITDA levels.
Okay, sir. Understood, sir. Thank you, sir.
Thank you,
Shaurya. We'll take the next question from Radha Agarwal. Please go ahead.
Hello, sir. Am I audible?
Yeah, yes.
Thank you for the opportunity, sir. So for my first question was that to make galvanized pipes, the raw material which you mentioned, HRC, that is currently available in the market at 45 rupees per kg. So what is the blended cost of manufacturing, including the raw material and conversion cost, just for this galvanized pipelines, and what would be the average realizations currently?
So basically, madam, in short, all of your question I can give you that around 6,600 to 6,800, that much of blended EBITDA, that much of per ton EBITDA we are earning from the galvanized pipe and coil. This product.
Okay, sir. And the second question is, you mentioned about the solar 180 to 240 crores of investment. So this would be spread over how many years, and by when do you start expecting the revenue? By when do you expect the revenue to start generating?
Solar is around.
It will take minimum 18 months.
So from 20, I think.
So from now on, there is no investments now on, because the land acquisition and all and other things will take its own good time of 3 months, 4 months. From there on, the things will move on, and we have good time to spread out. So in this financial year, I think last quarter, I think maybe some investment would be done, or in the next year only.
Next year.
Next year only, right? Next year only it will be done, not in this particular financial year.
So in FY26, in the core business, what is the capex, and this entire power business capex? If my understanding is correct, it would be in FY27.
But power business, there will be little bit capex in FY26. And in FY26, our core business capex, as we mentioned in the earlier conversation, that 10% is the normal maintenance capex are required for rolls, for rolling mill, pipe mill. That is nominal.
Okay, sir. So actually, since our core business is a generally low margin business for the industry, and since we already have above 100 days of working capital cycle, and we are going to invest more in terms of capital employed, wherein the revenue for the power will be seen only after 2 to 3 years, revenue and EBITDA. So that would dent the ROCs in the interim. So do you expect that when the power business starts contributing to EBITDA, so would that business give better ROCs than the current business profile that you have on a consolidated basis?
So undoubtedly, this particular core business, we are focused and we are focusing more onto the core business only. That particular vertical, as I mentioned before, उसमें जो हम आगे segmental जो काम कर रहे हैं, जैसे ready to use concept, that particular business is getting a new vertical is getting enhanced, and that particular line of activity will go on throughout the India. We will be the core suppliers, as the raw material is ours, as the final product is ours, as we are the manufacturer of scaffolding and the engineering unit is ours. In that particular segment, it's ready to use concept, wherein the whole site where the theft and other things are happening for the EPC manufacturers will be supplying the material ready to use. So that enhancement and the revenue part will be more better than the regular business, what we assume.
Okay, then I think I will present it in a different way. Between the standalone pipes business and the standalone power business, at optimum utilization of both the businesses, what would be the ROC of both the businesses, and which one do you think is better investment?
Madam, to be understand that the nature of activity of these two the segment is totally different. You cannot compare, you can compare apple versus apple. It's not a apple versus apple. Second thing is, this project is revenue generating from the day one, that power project. And under a fixed 25 years PPA with a predictable cash flows and minimal operational risk, the capital employed in the power business is also structured in a way that it does not affect the return profile of our steel business. So our core business ROC will remain healthy, and over time, the power vertical will add stable return, support our ESG positioning, and help unlock further value.
So what is the payback you're expecting from power investment?
That if you want this kind of questions, you just mail to us, we'll give. As I earlier also we have disclosed that now the project is very preliminary stage, only we have signed the PPA. Now we have to our consultant team and our team is selecting the land with the MSEDCL. After that, we can give you the detailed report.
So could you give us the
Thank you.
5-year ROCE target?
Sorry, Radha. Can I request you to rejoin the queue, please?
Yeah, sure. Thank you, sir.
Thank you. We'll take the next question from Madhur Rathi. Please go ahead.
Sir, thank you for the opportunity. Sir, I wanted to understand, considering some debottlenecking at our furnace and other segments, sir, what could be the optimum volumes that we can create in our MS Tube segment? And sir, what is the steady state EBITDA margin that we earn on our MS Tube segment?
Sorry, your point is not understood.
Can you please repeat it?
Yes, sir, I'll do that. Sir, I wanted to understand with some debottleneckings and some major minor capex and improvements. Sir, what is the optimum or what is the incremental MS Tube? What is the maximum MS Tube volumes that we can produce? And what are the EBITDA per ton on a steady state that we can own on the MS Tube segment?
So basically, sir, presently we are having 132,000 capacity. Whatever you said, the minimum capex, what we are up to reach up to 180,000 of metric ton.
Okay, got it. And sir, so 132 to 180, got it. And sir, what is the steady state EBITDA that we can earn on this segment?
EBITDA per ton?
Yes.
It's presently we are getting 8,000 plus EBITDA, and we are get more than 8,500, 8,000 to 8,500 per ton EBITDA.
Got it. Sir, so my question is on a broader level, sir, when I look at our 5-year business, sir, our MS Tube segment has grown at a slower rate, or I can say that our GP coil and GP tube has grown at a faster rate. So, sir, how do we see over the next 3 to 5 years if the not low, but when compared to MS Tube, the margin of GP is lower, sir? So, how do we keep our margin stable going forward? And which segment do we focus more on? Which segment should grow faster out of these two?
So, Madhur, there are two things. Basically, one is the backward integration, what we have, which is the MS Tube, which is the old going concern and it's going on. And minor capacities are getting increased, and on those lines it is going on. As you rightly asked, the GP product which is there in line, this particular unit has got installed 2 years back, and it is in continuous process expansion and other establishment का जितना रिटर्न्स निकालना सेटिंग ऑफ करना है वो ये लास्ट ईयर से स्टार्ट होना चालू हुआ है, जिसका मार्केट के अंदर प्रेजेंस है, और अभी कैपेसिटी जो एनहांस करनी है हमको, that is already moving on to the market. So there are two different concepts of backward integration and moving forward for forward integration. तो रॉ मटेरियल के सोर्स के थ्रू जो हम जीपी और सीआर वगैरह कर रहे हैं, वो मटेरियल को अभी मार्केट में जाना बाकी है, तो इसमें अभी गैप रहेगा और एनहांसमेंट के चांसेस ज्यादा हैं कंपेयर टू द बैकवर्ड इंटीग्रेशन प्रोडक्ट एमएस ट्यूब.
Okay, got it. Sir, I wanted to understand regarding two things on the solar front. Sir, are we trying to become an alternative to aluminum extrusion kind of that is required in solar, like setting up this pilot facility and आगे जिसको भी ये whoever would like to shift to like the B2B segment will grow. So if anyone wants to set up their solar plant, they'll straight away give the whatever steel requirement or steel fixtures kind of a business to us. Are we trying to do on that segment? And sir, currently, yes. Sorry, sir. Please go ahead.
Yeah, surely your assumptions are 100% right. That's the business model that we are planning to do. And in this, aluminum extrusion part is not included. This is purely with MS pipe and the accessories used for the model. And this will be supplied to B2B, and for the EPC contractors, they'll come back and procure it from us and we'll supply them directly.
So margin in this segment should be relatively higher to our current margin. Is that understanding correct?
Very true, very true.
Okay, got it. And
As
sir,
it is a ready-made product and one shop stop product, so the margin would be higher and very easy to communicate, very easy to supply, very easy to get the materials from the consumer, because if all we see the process, I mean, we are supplying from the base plate to the nut bolt. Everything will be manufactured in one process, one shed, and we'll be giving them as a complete set of structure, wherein that वो उसको सिर्फ लेके जाना है, install करना है और पैनल को लगा देना है. तो the hard working of that particular gentleman कि उसको बेस प्लेट भी लगाना है, GI भी करना है, GP भी करना है, पाइप को भी लगाना है, फिर उसके ऊपर पैनल को भी बिठाना है. All these particular things will be arranged. In that, the margins will be very higher.
Got it, sir. Sir, that was very helpful. Sir, just final question, sir. The 60 megawatt solar plant that we are installing, sir, how much that will be currently captively used?
No, it is not capitally used at all. This will be under KUSUM Yojana, PM-KUSUM Yojana, wherein this particular generation will be supplied directly to the Maharashtra government.
Got it, sir.
As per
Sir,
their agricultural policy.
Okay, got it. Sir, thank you so much and all the best.
Thank you, Madhur.
Thank you, Madhur. We'll take the next question from Devendra Viharankar. Please go ahead.
Hello, I'm audible?
Yes, please.
Yeah. First of all, congrats on the set number of 400 crore. This is, I think, history in your quarter-based revenue. 400 crore you are achieving. So, congratulations again. The first question is about your borrowing is 400 crore. Okay. You said your rate of interest is 8.50. Okay. Your repo rate is going down. How you can see there will be the rate interest rate will be the 7.8, 7.90. Means suppose you can reduce your borrowing interest cost to 10%. It is possible?
No. 10% is not possible. The lower side can be possible.
No, because your income statement you said 45 crore is interest cost. Okay. If suppose borrowing is 400 crore right now, rate of interest will be 8. Then it's come to 36 crore.
No. 400 crores, whatever it may be, that is on the as on your 31st March.
Okay.
So you have to take other financial charges apart from only you are not considered when we are put in the balance P&L that financial expenditure that includes the apart from interest, the bank LC commission, the
yes, BG charges.
Other BG charges, other bill discounting charges, bank commitment charges, bank processing charges. So many things are there. So all togetherly, it is coming under 44 to 45 crores, including term loan interest. So therefore, you simple calculation is not like that. Key 8.5 into 400 crores, it's equal to 32 crores. So therefore, 400 into 45 means 10%.
Okay, good. How we can reduce means 400 crore to 300? Any possible?
It's time to time business requirement as it is growing from 45 crores because we have procured some certain imported coil in the Q3 and Q2, Q3. Subsequently, we have taken some buyer's credit also. And as far as repo rate concerned, in the last financial year, the repo rate was not cut down by the RBI. The repo rate was cut down in the Q4.
Correct.
March. So therefore, in Indian financial institution, they are not cut down the rate. Despite Hariom is having A-rated company, therefore Hariom is enjoying the lower rate of interest comparatively to the any other in this segment.
Okay. Correct. Is a CRISIL rating?
Yes, it is CRISIL A minus long-term rating.
Okay. And what is your non-fund-based limits?
Fund-based limit are 340 crores. Working capital fund-based limit is 340 crores.
340 crores. Okay. Thanks. And congratulations once again. I think achieving that 30% rate once again next quarter. that are 300 to 400 and 400 to 450 crores.
Thank you, Devendraji.
Thank you, Devendra. We'll take the next question from Bhagwat N. Please go ahead. Yes, Bhagwat.
Thank you for the opportunity. Congratulations on the strong quarterly results. So we are targeting 30% volume growth for financial year 26. So as previously mentioned, we are estimating 9% PAT growth as compared to FY25. So these two estimations are do not reconciling. So could you please comment on this?
Sorry, can you repeat again?
So we are targeting 30% volume growth for financial year 26. And as I heard correctly, if 9% PAT growth, that is what we are estimating. So these two statements are not reconciling. Could you please comment on this?
So 9% means last year, FY24, if you check, our total PAT amount was 56.80 crore. In March 25, 61.73 crores. So
yes,
in terms of absolute value, if you taken on the growth trajectory, 9% growth over there. Versus 24 versus 25 in absolute value figure, not in terms of percentage of the against the revenue. That
okay. So that 9% we are not estimating for financial year 26, but that is the growth that you mentioned for FY25.
Yes.
Okay.
That is on value terms, not in growth in percentage. PAT versus turnover. It is in growth between the two PAT absolute figure year on year.
Okay. Understood, sir. And what would be our capex for the energy segment for this financial year FY26?
Sorry?
For financial year 26, what would we are estimating for capex amount for energy segment? I'm asking, sir.
For FY26, there is no much more of capex. It is only the regular capex which will be going on for the maintenance.
For solar power. Actually, you are asking about solar power.
Yes.
Solar energy. So there will be much more capex.
Okay, so that we are estimating from FY27.
Yes.
Okay. Thank you, sir. Thank you so much.
Thank you, Bhagwat. We'll take the follow-up question from Keshav Garg. Please go ahead.
Sir, whatever I could understand from our foray into this 60 megawatt renewable power, sir, I could not understand the rationale. If we are planning to supply solar structures to EPC companies, we can do it anyhow. We don't need to install a 60 megawatt power plant to supply solar structures to EPC players. They are two different things. Secondly, we already have 400 crore debt, sir. All these schemes are for those companies which have cash surplus. So by deploying in these areas, they can get some low double-digit kind of IRR, which is more than bank deposit rate for them. So it works for them. But sir, already we are over leveraged. So it is just, so why don't we instead try to get into stainless steel pipes or fittings or something like seamless pipes, sir, which is a related business instead of getting into power production. And sir, like you said that in future you will install capacity in Maharashtra, then you will use this power. So anyway, solar panel prices keep on falling. So it doesn't make sense to put a capacity in advance for your future capacity.
Keshav, thank you for the insights basically. So the business model, we cannot give you a very clear picture on this platform. I would request you to just meet us in person so that we can undoubtedly your insights on the SS pipe and other things are really welcoming, and we are already planning on that lines also. So the management is very much core on the development side and value-added products basically, which is the core area which we are targeting. So I would request you to give us some time to explain you in person on the complete parameters of the business. We welcome you to Hyderabad. Please allow us to host you.
Sure, sir. Sir, also, sir, for FY26, can we expect the PAT growth to move in tandem with the 30% volume growth?
PAT
growth versus tandem growth.
सर इफ वी आर एट 30% हमारा प्रॉफिट बढ़ेगा, नेट प्रॉफिट जो हमारा 30% वॉल्यूम बढ़ने की अपेक्षा है हमको, तो सर नेट प्रॉफिट बढ़ने का क्या एक्सपेक्टेशन रखे शेयर होल्डर्स?
तो जितना भी वॉल्यूम बढ़ेगा, जो भी प्रोडक्ट जो B2B में जाएगा, या फिर जो प्रोसेस जो वैल्यू एडेड प्रोडक्ट्स के होंगे, जिसके अंदर मुझे इस साल पूरी कंपनी की मशीनरीज को सेट आउट करना है, पूरा मैक्सिमाइज करना है प्रोडक्शन को, उसमें मैं भी यही देखूंगा कि बेसिकली जहां से मुझे मैक्सिमम रिटर्न मिलेगा उसी प्रोडक्ट को मैं भी बिजनेस को बढ़ाने की कोशिश करूंगा। सो फंडा बहुत क्लियर है कि जहां इनकम है, जहां पर वॉल्यूम ज्यादा है, जहां पर प्रॉफिटेबिलिटी ज्यादा है, उसी कोर एरिया को हम डेवलप करेंगे। तो आज हम वेस्टर्न रीजन या नॉर्दर्न रीजन की अगर हम बात कर रहे हैं, आज बात करने का रीजन ही वही है कि वहां पर हमें ज्यादा वॉल्यूम और ज्यादा प्रॉफिटेबिलिटी दिख रही है। जितने भी गैप्स अनऑर्गेनाइज सेक्टर के हैं, उस अनऑर्गेनाइज सेक्टर को हमको बेटरमेंट के साथ अपने ब्रांड वैल्यू को एनहांस करते हुए हमें उस जगह पर बिजनेस को करना है, विच इज द की एरिया ऑफ द मैनेजमेंट, एंड वी हैव टू डू इट, नो सेकंड ऑप्शन।
सर तो क्या प्रॉफिट हमारा बढ़ सकता है FY26 में? कुछ तो आपका इंटरनल टारगेट होगा।
100%। तो वो जो वॉल्यूम जो बढ़ेगा, जब हम कंसोलिडेट करके पूरी चीजों को लेके आके एक जगह रखेंगे, उसके नंबर्स को आज मैं डिफाइन करके बोलूं वो गलत हो जाएगा, आपके एक्सपेक्टेशन को बहुत हाई करने जैसी बात हो जाएगी। तो आज अगर वो कंसोलिडेशन में, जहां मेरे पास MS पाइप है, जहां मेरे पास GP पाइप है, जहां मुझे कट्टू लेंथ करना है, जहां मुझे CR का कॉइल देना है, जहां इतने सारे प्रोडक्ट्स के बास्केट को मुझे एनहांस करना है, आई कैनॉट गिव इट राइट नाउ कि मुझे वैल्यू एडेड वाले प्रोडक्ट में जो B2B बिजनेस है उसमें क्या नंबर मुझे मिलेगा। एक सेट ऑफ नंबर्स मेरे पास हैं जो कि मुझे मैं वर्किंग भी कर रहा हूं। तो आई वुड रियली लव दैट यू कैन कम डाउन, वी कैन शेयर यू ऑल द थिंग्स व्हाटएवर रिक्वायर्ड बाय यू।
Sure sir, thank you very much and best of luck.
Thank you.
Thank you. So there are some questions in chat. I'll quickly ask them. There's a question from Mr. Majid Ahmed. Can the debt reduce going forward? What are the working capital days going forward?
Yes, the long-term debt will be reduced, and the short-term debt also will be kind of not. We are not close the short-term debt. Short-term debt will be remain same, but the long-term debt will be reduced proportionately. Another 2 to 3 years, the short-term debt, long-term debt will be reduced by our internal.
The other question is from Mr. Pawan Mehta. We were planning to become debt-free by FY27. Where are you on that, and where do you see interest cost going ahead?
Debt-free means yes, our internal accrual by FY27 or by FY28 maximum, our internal accrual will be that much of positive, where we can be able to repay the entire debt amount by our internal accrual.
So the last question in the chat is from Mr. Gurvinder Juneja. Please share your thoughts on how and if your economics change as you sell more to B2B channels, that is margins, working capital and cost of sales.
Can you repeat the question once again?
Can you share how the economics of the business will change as you sell more and more to B2B channels versus 15% as of date?
So basically B2B sales, when we are increasing the B2B sales, the margin is always good. Moreover, it's a predictable, very much predictable top line is coming. And the margin you can easily understand, which is not connected with the recent market pricing or volatility. So it is in future it will be impact positive side only from the present scenario. So we are looking forward to it's depend on the what kind of product we are manufacturing and servicing.
Sure. So since that was the last question for the day, I will invite you to give your closing comments. Would you like to give any closing comments, sir?
Yeah.
Thank you again to everyone who joined us today. We value these interactions as they not only allow us to communicate our performance, but also help us to understand the perspectives of our valued investors and analysts. As we move forward, our priorities remain clear: deepening our integrations, expanding our market presence, enhancing profitability through value-added products, and driving sustainability-led growth. The result for FY25 strengthens our business model and the dedication of our team. We are confident in our strategy and are well positioned to capture emerging opportunities in both steel and renewable energy segment. We appreciate your continued support and confidence in Hariom Pipe Industries Ltd. Should you have any further questions or queries, require details, please feel free to reach out to our investor relations team. Thank you. Have a great day.
Thank you. Thank you to the management for giving us their time. Thank you to all the participants for joining on the call. This brings us to the end of today's conference call. Thank you.
Thank you all. Thank you all.